Are you encouraged by these numbers? Your initial take?
Well, and the numbers are consistent with our expectations. The June manufacturing is a lot better than May and certainly a lot better than April. And services sector bounced back quite strongly. But we also need to remember that PMI is a month-on-month rather than a year-on-year indicator. So although all those categories have improved, it doesn't mean that the economy is fully recovered.
A 54.7 print for non-manufacturing. Is this a sign that maybe we are seeing or starting to see signs of this consumption services sector finally at least show signs of life again?
Oh, certainly. It certainly sends a strong signal that the services sector, especially tourism and catering, are coming back to life, especially in Shanghai. I currently live in Shanghai, and it looks like more restaurants are open, more malls are open, and people are starting to go out, and that is certainly a foundation for the recovery of services.
How much room is there for easing now, given that we have an external backdrop of central bankers that continue to be more hawkish, and the data is looking better in China?
Well, the main constraint for further easing is the inflation environment. And currently, China's inflation is going up, but still it's quite benign. The latest figure is still only a little bit above 2%. And that means in the second half, we're very likely to see a monetary expansion. Because the problem now for the real economy is the real borrowing rate is still extremely high for the private sector. In order to support their borrowing and support economic growth, we have to have lower rates.
You mentioned the worst may be over in terms of growth, but when it comes to jobs, we're not quite there yet. How bad is the situation now?
Even for the PMI figures, although I haven't seen the subcategory for large firms, mid-sized firms, smaller firms, I wouldn't be surprised if the employment for mid-sized and smaller size firms are still in contraction in their employment. Because for many of the manufacturing companies, they have trouble containing their cost. The commodity prices and the raw materials prices are still very high, and the domestic employment situation has become worse by day because the fresh graduates are starting to come out in June and also will continue in July. We haven't seen the peak of unemployment rate yet. Probably that number will show by the end of July. And the economic recovery pace hasn't been fast enough, really, to absorb all those additional labor in the market.
Full year growth, you're still expecting a 5.1% print. I think that's probably one of the most bullish forecasts I've seen among your peers, Dan. Why stay so optimistic? Do you think that China can still actually achieve close to that growth target this year? And how are they going to get there?
Well, one reason why we put that number is the central government still hasn't fully abandoned its annual economic target. It has been talking about using infrastructure building to support economic growth. And so far, if we look at the different provinces' performance, this is still promising. Although I have to point out, the GDP growth doesn't have to translate into an accumulation of income or wealth. It could be just an increase in construction activities. And for Central and Western China, they're more than half of China's GDP. And their industrial production and GDP growth haven't really been affected by the lockdown, which mostly happened in the coastal region. And I believe that can lay a foundation for the growth to reach about 5%.
5.1%, does that factor in China emerging from zero COVID this year? Or is that a little bit too early to really forecast at this point?
The assumption is by the end of August, the COVID is pretty much contained in mainland China. And if that happens, there will be more room for monetary easing. And we expect a pretty strong rebound in corporate investment and in property sector.
Okay, let's talk about the property sector. I think Tier 1, you are starting to see some signs of recovery. I'm just wondering, at what point can we see a bit more of a broader recovery in the real estate sector?
The real estate sector now is still in contraction in terms of residential sales, and it doesn't look like the market confidence has been fundamentally improved. And one main reason is really the deleveraging requirements for the real estate developers haven't been relaxed yet. So far, the relaxation policies are only in home buying requirements. And if the real estate developers still have problem in their financing, that will affect the consumer confidence as well. Because for Chinese home buyers, if they see that real estate developers might have a probability of going bankrupt, they will delay their purchasing of the housing. So now we have seen a rebound in sales in some of the big cities like Qingdao, Suzhou, Chengdu, and Shanghai. But for a vast majority of the cities, I think they're still waiting for more clear signals as when this COVID control would be fully stopped.
I'm wondering in terms of what China can do in the second half. You mentioned fiscal spending. We perhaps have reached the end of that. Monetary policy is the only way to go, it seems. How long can China really stay with this policy divergence with the U.S.? At what point is there a concern about capital outflows in the second half now?
I don't think there is much concern of a capital outflow if China's economic growth starts to pick up pace. Because the thing for Chinese economy is that it needs to maintain a relatively high growth to absorb all those additional labor in the market. And now people start to borrow and start to invest, but still we have seen that private sector still have to borrow at a rate between 8 to 10% of the nominal borrowing rate or even higher. And that wouldn't really be helpful when the economic downside risk is still there. So I don't think the central government is unaware of the urgency of the problem. And the central banks have already sent out signals that they're willing to support by increasing the credit. So I'm rather optimistic that probably by the end of August, we'll see a policy rate cut.